Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, either a lack of confidence in the Australian economy or a cry for help, the RBA has cut its official interest rates to a new record low for the second time in a handful of weeks. At the monthly meeting on Tuesday, the RBA board broke with its long-standing practice by cutting its official interest rate by two consecutive meetings. The central bank eased its benchmark interest rate by 25 basis points to a fresh record low of 1% following a 25% cut back in June when the rates were around 1.5%. So with a fresh look at 1%, the market is now slowly digesting and seeing what to make of the recent cut. Although some market economists, including myself, thought that the RBA board might wait until there was at least some economic data to go on, there was never many points in delaying an inevitable decision. The RBA had already decided that even though jobs growth had been strong, or has, wasn't enough progress to wait for the market. So a little bit concerning that we're still at 5.2% on the unemployment rate. So hence why the market first time in a while saw the RBA go back to back on a rate cut. This was last occurred back in 2012. From a technical point though, we've got this strong outside range day, we've cut the 60-day moving average, and all in all, I do expect to see the market progress towards the downside. The target at this stage is at 69.1035. Any advances would see resistance around 69.95 to 70.25.35, where the market clearly was in a bit of a trouble and rejected and posted this outside range day. I would like to see these two indicators marry up to support the bearish case, but overall, we're still looking to a negative sentiment. Interesting to see that the market overnight for Euro took the challenge back to that break level of 113.30 and clearly was rejected and posted a long-legged doji. From the rejection, the market is still on track to see a target of 112.30. I do believe the market could actually stretch to 111.60. Any advances should again find resistance around 113.30 to 40. Well, the market turned back to safe haven demand overnight, but first of all, the technical implications did reject the level of 108.40.46 after posting a fresh higher 108.46. From the rejection from that 40.60 level, the market is now on track to challenge the level of 106.60.75 and reassess from there. From the marriage, I would like to see the MACD marry up to the RSI, but the RSI is negative and we're all nearly, at this point, trending with the ADX. The pound overnight broke the level of 126.35 and now confirms the view to 125 figure 40. I do ascertain that the market could actually break down further, but let's go one step at a time and see if it reaches its target at 125. Any advances should find resistance around 126.45. A very, very impressive rally in gold overnight. Since rebounding off the level of 1,376.84 in the last 3 hours, the market surged $50 or 5%. And from the rally has got to a high so far today of 1,437. At present, the market is very concerned to the fact that Donald Trump stoked further trade tensions with China again, after warning that any trade deal with Beijing would be somewhat tilted. This unleashed the bulls overnight for the precious yellow metal and soured at $50 to the highs around 35 to 37. Also adding additional demand for gold overnight was the announcement from the US government threatening to impose tariffs of $4 billion on additional European Union goods in long-running dispute over aircraft subsidies. So even there, Trump's looking to trigger tariffs. With the demand back in gold, we are looking at a target of 42 to 48, maybe up to 60. But do be aware that just as quick as we fell, could happen again if we get a rejection from that region of 42 to 48. But for now, let's see if the market can get to the upside target. unfortunately, the gold oil took out the level of $58 and plummeted nearly 4.5% from the drop. Now gives me a neutral view in the short term, and I'm now waiting until opportunity knocks. Let's see if this market can sustain the break. From a technical point, we're not fully broken down, but a little bit concerning at present where we are. So I'm neutral, and I'd rather sit out for now. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and hope you enjoy the great start to the new day.